Hi guys. Let's talk about the Nifty daily analysis for 29th of September 2025. First of all, I'm really sorry for not being able to create a video for 26th of September. And the reason was that I was not well. And then I started working on data. And what I realized that for the 26th of September, the markets were like these were the trending market, this was the range in which Nifty was working, and then here the like even if the this is if we take this as a stop loss, or if we take this as a stop loss and do an entry, then it was like quite a trending day. So not a lot to learn from risk and reward perspective from the model which I have created to do testing. But 29th was interesting, so I don't wanted to miss that. So what I do in these videos is that I don't predict anything, and the reason I don't predict anything is because of this. I am not a SEBI registered advisor or broker. The content in this video is created only for educational and learning purposes. So this is not a financial advice. If you want to buy or sell any security, or invest somewhere, please consult your financial advisors. They are the best people to guide you on how to do stuff. So what I aim to do in this video is that we analyze the past like a professional. So I have my own models which I have created over the years, and so I keep on backtesting data, because somewhere I feel that data is the only thing which is real and which tells you, because all of this is just numbers. So better sit with a pen and paper, or an Google sheet or Excel sheet, and create and test data instead of predicting stuff. And so I don't predict, because prediction also create biases in our mind, and then those biases create imagination, and imagination is not good if we want to do trading, because it creates scenarios, so like it's not real. So moving forward, first, I want to share something with you. So, this is the talk by Blackstone Jon Gray. He's the CIO of Blackstone, and this talk came out just like 5 days back in YouTube. And this is a very great talk. So, like, I don't watch news because I feel that news is too much of visual input, and it's also opinionated. So, the gist of the matter is not there. But yeah, I do follow Blackstone, BlackRock, and all these research houses, their news or their podcast and talks, and learn from them. So this is a really great talk. I feel that you should really watch this. A lot of insights were given over here, and what stand out for me in this talk was when John Gray mentioned that there are around 60,000 people who applied for the role of financial analyst in Blackstone, and out of those 60,000 people, only 138 got selected. So that is the selection ratio of 0.023%. And and no one, and it is not like, so putting things in the context over here, that not everyone applies to Blackstone. The top of the class, they applies to Blackstone. And so this literally means that elite of the elite of the elite of the elite are the ones who get selected in Blackstone as a financial analyst. So why I am mentioning this is because this is our competition. When we say smart money concept, so this is what this smart money is. And that's why, we have to be very like on the toes to be at par with these guys. So coming back to our analysis, so let's see what Nifty did on 29th of September. Okay, so on 29th, Nifty opened on 5 minute. It gave a it is a sell signal candle, but yeah, it is started recovery, and then it recovered, and then it went down. Okay, so this is what the gist was. uh where I would have entered in this trade is, if I would have been sitting in the live market, would be somewhere here at 9:30 candle. Why 9:30? Because like this is the 5 minute, so Nifty reverted back from 5 minute and then it went up. So over here I would like go around 9:30. So 9:30 it was 719. Okay, let's open this. So this is my trading journal which I create, which I have created. So what is there like so this is a trading journal actually, and so what I have done over the years that I have combined my trading journal and my trading back testing into one stuff. So because it's easy, like have everything at one place, and I usually use Google Sheets. The reason for that is that it's easy to manage. I have a phone which in which I have configured these sheets, so even if I am not in my laptop I can easily like go and configure it. So okay, coming back, so I have done some blackouts because I think these are not necessary right now, and this doesn't like this will confuse you more instead of giving a clear cut picture of what's happening. So my trading capital for the day is 1000, mood check and everything. So this was for 29th. So Nifty spot at previous close was 24,672. Let's see. Yeah, it was 672. So I have done some homework over here so that the video becomes short, because it's like otherwise it's just a half an hour video. So instrument of attention for 29th will be my Nifty previous close was 672. So instrument of attention will be 24,800 and 24,550 for me. You can change it, like it entirely depends on you. You can take it in the money also. I take a bit OTM because you will come to know why. So time frame checked. So instrument one. So my first trade is a call, like so this has happened, then this happened, then this happened. So this is a confirmation that market would go up for the short time in the intraday. Okay, so I would probably enter over here at 9:30. Yeah, 9:27. So I have given 9:27 over here in my back testing. So my 9:27 is this one. Okay, yeah, because like if this candle is made, then I would enter somewhere here only. Okay, 9 9 20 9:37, and my entry price. So okay, so let's come from here. So call price at open for 24,800. uh, this is 24,900. Nifty 24,800. I'm pretty new to these videos and I'm also a bit camera shy, so please bear with me. Okay. So coming over here, but I hope that I'm able to deliver what I want to deliver, because that is the main thing, that delivery should be better. Coming to 27th, okay, 927. 927, it was in the range of 48 and 51. What I have taken is around 48.1. 48. Yeah, 927. Yeah, so 40. So what I do basically is that I take an average of this. I will show you something. This might help. So what I basically do, so this is for the put part. I just keep on deleting this stuff. Um, So yeah, so I have these data points, like I keep on getting it for a daily basis and all that stuff. So I just keep on, you know, so I just keep on working on these data points, like for 26th of September. So this is the 24/700 PE. So basically, like, when you want to take a price for your backtesting model, what I would suggest is that, I don't know, like, my Excel behaves very weird. So that's why I'm not doing some. Ideally, I should have done some. So so over here, this divided by 4. So I would take 36.735 as the value where I would buy. So this would be the value. So, like, so that is why, like, I do average. So 24, so 48 becomes that. Okay, so the quantity bought is, okay, D1, which is my uh, uh initial capital, divided by the price of the call. So this become 2079. Reason of entry, what would be the reason of entry in the trade? That would be, for me, that in Nifty chart, uh, it gave a recovery from the day, from the lows of the day, of the opening day. So that is the reason why I would enter in the trade. Okay, so going next, uh, the price of Nifty at the time of buying, it should be, yeah, 2703,704. You can again, like, you can just download the data and take the average. That would be better. But like, if you are a pro, then you can just do a visual average and go there. And stop loss, yeah, stop loss is important. So this is there, 24,704 in this one. So my stop loss would be here, the low of the day, or from where the rally started. You can have it at 672, or you can have it at 668. It really, like, it's just a 4 point. It's like, it is 1 point in Nifty, I guess. So 672. So my call price at is stop loss. Like, if so, this means that if my uh, trade goes to stop loss, then what would be my call price? So this is like, this is not a perfect thing, but this is a kind of a model. Okay, and what I do over here is that I just take the, okay, so what I have done over here is that I have taken the most tested price. I could have put it at 42, but that would have been a lot, because before that I got a price at 44, which shows that, like, which is one of the most tested price. So let's go over there. So 44, yeah, most tested price. Stop loss in points is, so my buying price minus my call price, my price, if, like, my estimated price if it hit the stop loss. So that is 44, so it is 4 points. So now, stop loss, so now, trading capital at risk, this is very important, so trading capital at risk is my stop loss multiplied by the quantity bought, 8524. So my percent trading capital at risk, it becomes 8524 for this trade, divided by my total capital I have right now, and this multiply by 100, 8.52 percentage. A lot of people will say to me that, like, I will get a backlash, like, this is a lot of, like, who trades with 8% risk. But I want to say that, I am a call buyer. I am an option buyer. I am not an option seller. So this is pretty normal, like 8%, 10% risk at capital is something very normal. So, like, you can't design a trade. So, like, as you do backtesting more and more, you will understand that, yeah, like, this is how we do it, this is how it is done. And that's why, like, if you're an option buyer, you should do backtesting. Don't go to an option buy if you have not backtested data. It just doesn't make sense. So target price beforehand. Okay, so what I have done over here is that I have decided a target price. It is actually, it should be target price, or points price, or points to be taken. Okay, So uh, so that is 15. So right now I am designing this trade on the basis of points. So points taken is 15. So I am I have a stop loss of 4.1 and I have entered in the trade for 15 points. When you have large capital, you usually do this because otherwise it's a lot of risk. I am already sitting at a risk of 8%, 8.5%. How could I like it's very tough to imagine and to make a model to just trailing stop loss and everything. But yeah, like if you can do trailing stop loss over here, you should do. Like I will surely backtest data in YouTube one day where we will do it with trailing stop loss, but for today let's just keep it on the point basis. So target and exit price will become my entry price and plus the target price beforehand. Okay, so what the points which I have decided, so my target price would be around 63, and now my targeted PNL would be my points multiplied by quantity bought, so that is 31185. Now I have exited. So now where I would exit in this trade? I am in this trade. I entered here. Where I would exit in this trade? Okay, so this went here. So this went up. I think this trade worked in our favor. So how would I do it? Okay, so this is like I have decided 15 points. That is the thing. I am not riding this entirely. Ideally, like in live market, if I'm we do with trailing stop loss, so we do ride it entirely. But let's take it just points right now. Okay, so 63. When did it hit the target of 63? 66, 62. Yeah, I think it's 9. Yeah, 65, 63. Yeah, so it's around 9:51 a.m. Like yeah, it is around 9:51 a.m. where it decisively hit the target of 63. It actually hit way more than 63, but let's take 63. Let's exit at 63. Okay, so reason of exit target hit, was the exit disciplined? Yes, it was disciplined. Point gains 15. My PNL is 31185. Now risk is to reward decided beforehand. Beforehand, how much I have decided. So I said my risk would be 4 points and my reward would be 15 points. Okay, so my actual during the trade, my risk was 4 points and my reward was 15 points. Sorry, yeah, points gained were 15 points. So this became 0.27 again. I have not I have blacked them because like this is my trading journal also, so this will like keep on uh, creating confusion. So like as we progress we can discuss all this stuff, but I don't think it's relevant. So grading trade, yeah, it is a textbook setup and emotional checks and balances. No, no, no. Okay, so this trade was successful. Like if you have a point based strategy where we took 15 points in, so this was a successful trade. Let's go again. So over here the market reversed. We are sitting in our cap with our capital on, and what would have happened now? This is gone down, 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 down. I think the playbook is same. As soon as market like came below, like even if market came below over here 712, then also down, 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 or if it came down 744, then also it is down, down, down. So like it totally like it's the same trade, is just a copy of this. So I don't see a need of doing it. Let's go here. So this is the trade where a lot of people will get trapped. Okay, this is like this is these are the kind of setups where I which because of which I started doing back testing. So, and this is what I want to show you guys, like how profitable these setups are for option buyers. Okay, so let's start for this one. So what would have happened? This came down and then down, and I actually have RSI. I should delete this. Yeah, I don't use any indicators. I basically do price and volume, because like, I think indicators just add a lot of noise in the chart when everything is about price and volume. Okay, so 12:45 it recovered, then it recovered, and yeah, this is the entry candle. We could have entered here. So what has happened over here? So I entered at 1 p.m. Okay, yeah, this is the entry candle. So average of this becomes, so the entry price is 22.95. Let's go to 24,800 C and see what was happening at 1 p.m. there. Okay, so at 1 p.m. 24,800 C was at 22.21. So what we did, we entered at 22.95. So I majorly took an average of this, and the average price came out to be 22.95. Yeah, so let's enter at 22.95. So quantity bought is my trading capital of the day divided by my entry price, 4357. Wow, that's a lot of quantities. Now the price of Nifty at the time of buying, so this became, yeah, because this is the, we are entering at 6 at 1 p.m. So yeah, this is like 656, 680. So yeah, 655 is the price of Nifty at the time of buying. Now the stop loss in Nifty, we take the stop loss. Yeah, it is this, like either we can have this as a stop loss. It really didn't matter. Over here, yeah. So this can be the stop loss. Like if it goes over here, then it goes down. So yeah, 24,615 is the stop loss. Now the call price at the expected is stop loss. So let's see what was happening in 24,800 C then. So where my stop loss would be for this trade. Of course, it would be here, somewhere here. That is the low of the day. Yeah, that is the lows of the day. It's I think a low for a very long time. So somewhere here should be my stop loss. 1895. Yeah, 18.8. Stop loss reason again. This is the most tested price and the lowest price. Stop loss in points will be my entry price minus my stop loss, 4.15. Now trading capital at risk will be this multiplied by number of quantity bought. Yeah, okay, this divided by my trading capital for the day multiplied by 100. Yeah, see, this is the reason why we backtest. This trade has a risk of 18%. My previous trade have a risk of 8%, where I have already made money for the day, and then probably, like, if I'm too skilled, I have taken a downward move, and this trade have a risk of 18%. I will just go back to charts one again, like if we are not doing something wrong. Nah, we entered here, we will not enter here. No one in their right mind will enter here because it's still recovering. Like this will become a pure gamble if we enter here. So we entered in this candle when it was becoming this trade would have surely given some money, I'm pretty sure. So it went from 22.95 to, yeah, like there is a lot of stop hunting which has happened over here. It went to 35, 10 points. It haven't even given, like, yeah, like it's a, like, see, the thing is, we started at 22.95, and then this is a stop loss hunt, then like this is difficult to survive, then this is a pure move. Okay, so if we say for the, in the ideal case, in a very, in a parallel universe somewhere, if I have exited at 112 and taken, say, in the parallel universe 32 points, so this is a 10-point trade. Okay, maximum a 10-point trade. It's not beyond 10 points. Because why this is 10 points? Because my capital at risk is 18,000. It's a lot of money. It's an 18% risk. I don't see a point going beyond this. Like 18% is, this is what I have to say to this for this, digest. I can't digest this. So yeah, that is why we do backtesting. And this is the reason, like I feel that instead of predicting Nifty, it's always good to backtest data and see what is happening in the data. So yeah, that's all for today. That's all. Like, we got three trades. Sorry, just to re-summarize, we got one trade, we got second trade, and third trade was a trap. And that is the reason, like, before entering into any trade, just like at least do this. This is like basic mathematics, this is the least we can do. So we keep on doing this. Like, as soon as I see a 18% risk, oh my god, like, this is what I would say, digest nahi hua, can't digest this. So that's all for today. I will be back with 30th analysis if there is something good happening over there. If it is a choppy trade, then I will be back with that. Till then, like, if you please like and subscribe to my channel. I'm pretty new in here. Please leave a comment on how you find my work, and how can I improve on this, because I'm very new in here. And thank you very much. See you in next video.